Ever wondered if SARS will want a piece of pie if you won the lotto today? Now, the truth of the matter is that when you win a lotto, the winnings are not taxable. However, you still need to tell SARS how much of the money you received from winning a lotto. Yes, you need to disclose that in your tax returns. And then SARS, of course, knowing that is from lotto, won't tax that particular amount. However, let's say now you then take that money, you put it in a bank as an example, and then it start earning an interest. You will be subjected to tax in that particular interest income from that particular investment, provided obviously it's above what you call exemption, basic interest exemptions, which is about 23,800. I mean, if you want millions, most likely the interest income on those investments will most likely be more than 23,800, right? Now, let's further say you obviously need to disclose those interest income to SARS. Either way, the banks will be required as by the law to actually tell SARS how much of interest income you actually have earned. You by the time you populate or you try to submit your tax returns, you will see the income from banks already being pre-populated into your income tax return. So now let's then you decide then, listen, I want to take care of, I want to help my siblings, my family members, mothers, and I want to build them houses, or for that matter, I want to buy them cars. I want to just change their lifestyle. Would you be subjected to tax? Yes, you're most likely going to be subjected to what you call donations tax by the amount that you gifted to those family members. Yes, it can range from 20% to 25% depending on the volume of your donations. If you donate anything more than 30 million in accumulated, which means that all the entire donations are more than 30 million, you'll then start being subjected to donation tax at 25%. Anything below there, you'll be subjected to donation at 20%. That could be a lot of money that could catch you off guard, especially that you'll be so excited having won lotto. Now, what will happen if then you get excited because maybe you've got a spouse, you split the winnings with your spouse? Would you be subjected to tax? No, you can't be subject to tax. A donation tax is not applicable to spouses if you split or you give to your spouse any form of lotto winnings. That could be another form of savings that you could actually bypass. Now, then what will then happen if, let's say, I buy this expensive property, but later on the winnings that I start running out of money, then I start selling those assets, including that particular property that I would have bought. Then what will happen is that those properties disposals could potentially be subjected to capital gain tax. Now, let's say now you start a business and that particular business is owned by trust for protection and continuity for purposes, and you are ensuring that the wealth actually remains within the family, and you're doing things, you went for advisory to say, listen, separate yourself from the winnings, make sure that you create this investment structure, you're entering into property rentals. You're considering all these wealth preservation strategies, and you're loaning the business or you're loaning trust the money. Be mindful that you could trigger tax implications as a result of the loan to the trust or the company that is owned by the trust. So be mindful. That's why when you've got money, guys, when you enter into business transactions, just consider having a conversation with your tax advisor, including ourselves. You're more than welcome to reach out to us. The details are on my profile. You can reach out to us if you want to structure any form of money and you want to move any form of money from yourself into investment structure, because any movement of money could potentially have tax implications that you might not be aware of, and that could actually result in you having a lot of tax penalties. At the end of the day, any form of income or any form of money that you receive must be disclosed to SARS. That's very important. Any form of money that you receive must be disclosed to SARS. Or for that matter, any form of something that you receive must be disclosed to SARS, so that you actually being subjected to assessment. Whether you're going to be taxed or not is not a point of importance, but because if you disclose it, SARS will determine if that money is subjected to tax or not. In most cases, if it's a capital in nature, you're more likely not going to be subject to tax. That's why it's so important, guys, to do estate planning, to do some sort of assessment with your tax advisor to ensure that you don't find yourself on the wrong side. I'll say good luck.